Hello, and welcome to the September Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. The news for August was about as good as it gets. It was a very good month overall for the markets, one of the best Augusts ever, with just about everything up, and the Nasdaq and S&P 500 at new highs. Investors continued to move back into markets as both the medical and economic risks subsided. At the start of the month, though, things didn't look as good, with the second wave of the pandemic well underway. Consumer confidence and spending dropped on the higher infection numbers, and jobless claims started to rise again. The Federal Reserve, recognizing the risk, kept interest rates low and pledged continued support to the economy, but it still looked like the renewed spread of the virus was going to derail the recovery. Through August, though, we saw the infection numbers steadily decline, and at month end, the virus is largely under control again. Similarly, during the month, we saw the economic recovery start to strengthen again. Consumer confidence looks to have bottomed, and wage growth has ticked up again, supporting spending growth. And this, combined with a strong recovery in business confidence and investment, leaves the recovery intact, and in fact with a stronger foundation than we had before. Entering September, we're in a much better place than we were a month ago. But of course, we still have things to worry about. While the medical news is good, the reopening of the school systems and universities around the country could well lead to more infection growth. From an economic standpoint, the biggest risk is how consumers will react to the expiration of the supplemental federal income support. This was a major positive factor in the recovery so far, and the expiration could well slow things down again. And finally, of course, we have to watch for the effects of the election. Last time we saw partisan conflict take a toll on the economy, and that could well happen again. But despite those very real risks, the likelihood is that things will keep getting better. While the medical risks around school openings are real, we know what to do to mitigate those risks, and we're doing it. While we did see a slowdown in the recovery, activity has picked up again. And while the federal government is moving slowly on another round of stimulus, it'll likely get there eventually. That's what the stock market is expecting anyway, as values are at or close to all-time highs. That's also what the data is suggesting, despite the risks. While the risks are real, overall, we are still in a much better position than we were a month or a couple of months ago. That's it for this month. Thanks for watching. Join me in October for the next monthly update. But until then, be sure to check my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We'll get through this together.